When you buy a new phone or a TV from a big brand like Samsung or Xiaomi, have you ever stopped to think about who actually put it together? Well, turns out there's often a hidden giant doing all the heavy lifting. Today, we're pulling back the curtain on one of the biggest you've probably never heard of, Dixon Technologies. See, Dixon is what's known in the biz as an original equipment manufacturer, or OEM. That's really just a fancy way of saying they build the electronics that other companies stick their logos on. They make phones for Samsung, TVs for Xiaomi, washing machines for some of the biggest brands out there. They are, quite literally, the brand behind the brands. But here's the crazy part. This success story almost didn't happen. Just a few years ago, back in 2018, the future looked incredibly bleak. Investors had some serious doubts about whether Dixon could even survive, let alone become a giant. So the big question is, what changed? How on earth did they pull off such a massive turnaround? To really get what happened here, we've got to jump in the time machine. Let's wind the clock all the way back to 2018 and see what investors were seeing, and more importantly, why they were so worried. So Dixon had a pretty solid IPO back in 2017, right? But that initial excitement, well, it started to wear off pretty fast. By 2018, if you went on investor forums, you'd see skepticism everywhere. Sure, a new deal with Xiaomi offered a little glimmer of hope, but the deep, fundamental risks, they hadn't gone anywhere. Okay, so what was the number one concern? It all came down to profit, or, the lack of it. An investor on the popular Value Picker forum pointed out this huge red flag. The company's net margins were just incredibly low. We're talking razor thin. They were selling a whole lot of products, but barely making any money on each one. And that thin margin problem, it created another massive issue. Because they were making so little on each sale, Dixon was dangerously dependent on just a handful of big clients. As another user pointed out, losing even one of those major contracts could be a severe blow to the whole operation. They were walking a tightrope. So, let's just put it all together. You have to realize that in 2018, Dixon really looked like a house of cards. They had those paper-thin margins, they were leaning way too heavily on a few clients, and, to make everything worse, some of their key mobile partners like Gianni and Intex were getting crushed in the market. It was a perfect storm of risk. Okay, so that was the past. Now, let's hit the fast-forward button to today. What happened to that super high-risk bet? Well, the transformation has been, and I'm not exaggerating, absolutely explosive. Every single one of those doubts from 2018, they've been completely turned on their head. That very uncertain future has morphed into a dominant market position. Those dangerously low margins have been replaced by record-breaking profits. Let's just look at the actual numbers. First up, let's just look at their total sales. Revenue from operations shot up a massive 33% year over year. Now, that alone is incredible growth. But believe me, we're just getting warmed up. Okay, but here's where the story gets really wild. Their operating profit, or EBITDA, didn't just grow, it surged an unbelievable 152%. This is proof positive they weren't just selling more. They were making dramatically more money on everything they sold. The old profitability problem was officially solved. And the bottom line, the actual cash profit they walk away with after all taxes and expenses, that jumped by a staggering 81%. This is a company that didn't just survive. It figured out how to thrive and is now firing on all cylinders. So when you put it all together, the official data is just mind-boggling. We're talking about revenues that are almost $2 billion in a single quarter. The numbers just don't lie. This company completely defied every single expectation. So how in the world did they do it? This wasn't just luck. It wasn't an accident. It was a killer combination of a smart strategy meeting perfect timing. Let's break down the engine that powered this incredible growth. The first big piece of the puzzle, and you really can't overstate this, was government policy. India's Production-Linked Incentive, or PLI scheme, was an absolute game changer. It essentially pays companies like Dixon a cash bonus for manufacturing more products locally. This gave them a massive financial tailwind and helped reshape the entire sector. Next, you got to understand their business model. Dixon does both OEM, where a brand like Samsung gives them the exact design to build, and ODM, where Dixon actually designs the product for the brand. This flexibility is key because it allows them to work with a way wider range of clients and capture more of the value for themselves. So their master plan really came down to these 4 key steps. First, they went all in on that PLI's game from the government. Second, they diversified away from just TVs and those struggling mobile brands into new high-growth areas. Third, they formed some really powerful partnerships. And finally, and this part is absolutely critical, they started making the parts inside the products themselves.
And that last step, making their own components, that's the real key to their future. They're transforming from being just a simple assembly line into a complete manufacturing ecosystem. And that is how you build a powerful, lasting competitive advantage. So instead of just putting phones together, they're now making the screens for a joint venture. They're making the camera and fingerprint modules. They're even moving into lithium-ion batteries. This whole strategy is called backward integration. And it's a huge deal because it gives them way more control over their supply chain and, crucially, much higher profit margins. And this strategy has opened up entirely new worlds for them. Their core business in mobiles and consumer electronics is still the foundation, but now they're building these huge new pillars of growth in telecom equipment and IT hardware like laptops, and they're already looking ahead to the massive opportunity in automotive electronics. And hey, don't just take my word for it. On a recent earnings call, Dixon's own management said they believe the telecom segment could become their second biggest business, right behind mobile phones. That is a huge statement of intent. So when you put all these pieces together, the Dixon story becomes something more than just a single company's success. It starts to look like a potential blueprint. So what are the big lessons from Dixon's incredible journey? First, smart government policy can be a massive catalyst. Second, in manufacturing, size really matters. Scale creates a protective moat around your business. Third, diversification is the ultimate defense against the kinds of risks that worried investors back in 2018. And finally, the real money and stability come from moving up the value chain.
Which leaves us with a final big picture question. Is Dixon just an outlier, a unique company that got everything right at the perfect time? Or have they created a repeatable formula, a blueprint that could power India's ambition to become a global manufacturing powerhouse? The answer to that could shape an entire economy.